Hello, good afternoon, everyone. Once again, we're very sorry for the interruption we've had with connections. Obviously, working under these circumstances, sometimes the connection, internet, Facebook might fail us. We did a lot of tests before yesterday and today, but when we did the real one, somehow it failed us. So we apologize for this, apologize for the inconvenience. We've had over 2,500 people who have been connected in our first trial. We're very grateful for your interest, and so we promise that we will do this recorded video, so you would have a still presentation from Robert, and then we can take questions which we will deliver to Robert by email, and they will reply to us. And I think most of you have already registered for this event, so we will distribute those answers by email later on. So it is my great pleasure once again to kind of reintroduce again Robert Wright, who's the CEO of Raiffeisen Bank, to talk about the banking in these pandemics, how it is affecting the bank and what the bank is doing, and how Robert sees this pandemic affecting the whole economy in the next few weeks and in the next few months and years. Robert, if I may, with great pleasure.
Thank you, Tini. As you say, we're trying to keep our social distancing here and respect the rules. Apologies from me as well for the technology, and apologies for me probably now repeating some of what I said earlier, but I was only on slide 3, and I still have a lot more to mention. So as I said before, strange times, unusual times, unprecedented times, and a situation where we still don't quite know where we'll be even a week from now, never mind a month from now. Very difficult to predict. So my presentation looks at the role of the banking sector, partly across Europe, but primarily here in Kosovo, what we're doing, what we're planning as an industry, and what we're planning as Raiffeisen Bank. And hopefully we can talk again in perhaps a month's time to see if some of our forecast predictions, expectations were as expected, or better, or possibly even worse. So the theme of my talk is the role of the banking sector. I've been in banking for nearly 40 years and I've never seen anything quite like this. These are unprecedented times and a challenge for all of us. It doesn't matter how much you might practice your crisis management activity in a stable, normal environment. When it comes to the reality in a real crisis management environment, the activity, the practices, and the way you react are very, very different. My agenda today is the following. I'll look at the banking market, first of all, the European banking market, and in more detail, the Kosovo banking market. I'll look at the priorities we as an industry and as Raiffeisen Bank have agreed. The action plan, which is in place, is being implemented right now. Where are we now against that action plan? And where do we expect to be in the future? The future being no more than perhaps 3, 4, 5 weeks. Very difficult to predict just how and when this crisis will be over. I like this quote from Michelle Dean, the Canadian journalist. A crisis forces commonality of purpose on one another. And this was a very appropriate phrase and a very real phrase for the banking industry, for the Kosovo banking industry, back on the 13th, 14th, 15th of March. Friday the 13th of March is a day I'll always remember, where we got together as a banking association on that Friday evening to decide exactly how we should reply and respond to the crisis. And we had 2 words in mind: stability and reassurance. For all our different audiences, our staff, our customers, the central bank, the government, the media, all needed a common and consistent message from the banking industry. Looking first of all at the European banking market itself, the market is very well placed to withstand a crisis. The financial crisis of 2008 was very difficult, but it put in place regulations, safety nets, and liquidity buffers, things that would make any future crisis more manageable. And we're seeing that today, and the benefit of all what at times has been very bureaucratic, very complicated, very difficult regulation to understand and implement. But I think in this current crisis, we'll see the benefits of all that hard work and all that cost and all that effort. And there have been a variety of different parts of the industry implementing new regulations. Basel, you may have heard of Basel II, there's Basel III and there's Basel IV. Here in Kosovo, we are compliant with Basel II. Basel II is about having adequate capital. It's about being able to get through stressful times by stress testing various parts of the banking operations, and about managing risk as well, not just credit risk, but liquidity risk and other types of risk. And the Basel regulations require banks to get through those stress tests and be fully compliant with the regulations. BIS stands for the Bank for International Settlements. This is the institution that governs central banks, and their priority in the last decade or so has been about ensuring financial stability across the banking industry throughout Europe. And in countries that were once very unstable, such as Greece, Italy, Spain, the stability of the banking system is much greater, as it is across Europe, and as it is, of course, in Kosovo, which I'll come back to shortly. The European Union, or more specifically the European Central Bank, has again put regulation and best practice in place to ensure financial stability by identifying risks, assessing the potential of those risks, and mitigate and producing activity and regulation to mitigate those risks if they do occur. And finally, the European Banking Association has also created a common rule book where all European banks now operate to a common practice and a common set of guidelines and a common set of regulations. You may wonder why there's a photograph of some camels on this slide. It's referring to something known as the CAMELS rating, which is a set of criteria that all European banks aspire to and work to. The C in the CAMELS stands for capital adequacy, and that's about ensuring that all banks have enough capital to meet all their obligations towards customers, in particular savings, without ceasing its operations. So if all its obligations were met, it would still have enough capital left to continue its normal operations. And this is about both the quality and the quantity of the capital. And you'll hear things mentioned such as Tier 1 and Tier 2 capital, which are different measures of the quality. And all banks across Europe comply with good quality capital adequacy. Asset quality is about the quality of our loans, our investments, our real estate, and the quality of the collateral supporting those assets. And again, that has improved dramatically in the last 10 years. I'll come to how that is in Kosovo shortly. Management ability is about the ability of the top management, the board of directors and the top management of a bank to manage the bank through crisis such as this, to manage change and to be compliant with all the new banking rules. The E in CAMELS is about earnings, it's about the bank's income, its cost efficiency and its cost efficiency ratios. Liquidity is very important. It's the ability of the banks to convert assets into cash. How liquid and how quick can that liquidity be realized? And the challenge for the bank is to make that balance between having long-term liquidity that's locked away but is safe and secure, and short-term liquidity in things like customer savings accounts, which could actually leave the bank this afternoon, tomorrow morning. So the liquidity is there in huge volume, but is not, as we say in the industry, very sticky. And it's getting that balance of stickiness with your liquidity that is very important, and the balance between short-term liquidity and long-term liquidity. And the S of CAMELS is sensitivity to market rates, sensitivity to market risk. And this has been a trial and a test for some banks where, for example, they've been exposed to lending in foreign currencies. You may remember a lot of banks were offering Swiss franc lending at one time, or other currencies, and that was quite susceptible to changes in market rates. Luckily here in Kosovo, 99% of our activity is in euro. So CAMELS is a rating that's very important for the European banking industry, and of course, here in Kosovo, we also have to comply to the same rules and regulations related to camels. And I'm pleased to say that all Kosovo banks score well on all of these criteria. And finally, a difference again to 10, 12 years ago, and making our ability to face this crisis much easier, is business continuity management. We all have scenarios in place for low risk, high risk, and severe risk scenarios. Currently, we're treating the virus crisis as a low to high risk scenario. We're not yet in a severe scenario as far as the banks here in Kosovo are concerned. Turning to the Kosovo banking market, against the background I've just painted, you'll see three words used regularly about any banking industry. That applies to the Kosovo banking industry as well. It's about being stable, liquid, and well capitalized. They are the three criteria the central bank, the government, and the banks all look to achieve: stability, liquidity, and well capitalized. And I'm pleased to say in Kosovo, that is the case. If you look at some of the criteria in these boxes, all 10 banks in the country are profitable. In 2019, we delivered a profit of 89 million euros as a banking group. We have 4.5 billion euros of assets, of which 3 billion are loans outstanding. Non-performing loans are just 2.1%, which is one of the lowest in the region. Compare that, for example, to Albania, where non-performing loans have been as high as 10 or 11% quite recently. We have almost 4 billion euros of deposits, very stable. Coming back to that point I mentioned earlier about stickiness, our deposits in Kosovo are very sticky. We have 206 branches between us, so access to banking is there for everyone. We have 497 ATMs and 13,241 POS machines, which again enables people to use the banking system without the need for cash. We have over 1 million private individual customers with nearly or over 1.25 million debit cards being used. So again, that prevents the need for cash. 303,000 customers are using e-banking facilities of one form or another: internet banking, mobile phone banking. The national and international payment service and the ability to send payments abroad is fully operational. And in times of crisis, the 7 international banks operating in this country all have the benefit of international parent support for resources and other guidance and help in the time of crisis. So I think the Kosovo banking market is, as that bullet point says at the top, stable, liquid, and well capitalized, and relatively well positioned to face the current and ongoing crisis. I go back to Friday the 13th, as I say, a day I will always remember now. When, as a group of banks, we got together and looked at 4 priorities: cooperation of all the banks, continuity of customer service, so that it was as normal as possible to avoid any panic, any misinformation, any concern, the availability of cash, both the availability to customers and our ability to transport it and store it as well, without the ability to, as we normally do, take cash out of the country. We have to transport and store all of it within Kosovo because the borders were closed. And communication, the 4th C. It was a day of 4 C's: cooperation, continuity, cash, and communication. Communication being key amongst customers, the government, the central bank, and the media. And let me just talk about each of these C's in a little more detail. For cooperation, the branches, of course, our priority is our staff and their health and well-being. So we had to reduce our branch hours to keep staff at home as much as possible, but we still agreed to operate 5 or 6 hours a day during the crisis. And we all agreed the same operating hours of 9 till 3. The central bank relaxed various rules to enable us to operate more easily, to have less of a cash buffer, and to have various other regulations a little bit more relaxed to make our operations easier. We agreed as a banking industry to defer loan payments for all customers, whether that's private individual or business. doing that online as much as possible through agreements, electronic agreements, and avoiding any need to come into the bank. I'll come back to that deferred loan payment process a little later. But we all agreed as banks to implement that, and it is now in place. We were also offered significant support by the World Bank, by IFC, by EBRD, and other institutions as well. And let me say, we're only 2.5 weeks into the crisis, and so we could be having a very different conversation in 3 or 4 weeks' time when some of this support is much more needed. Hopefully not the case, but this is a moving target where it's almost impossible to predict week on week exactly where we will be. So cooperation was the first of the 4 C's. Secondly, continuity is important to run the bank and to dedicate resources to running the bank. We actually have 2 phrases in Raiffeisen Bank: running the bank and developing the bank. And for now, short term, developing the bank can take a back seat. This was all about running the bank. So we identified the staff, the functions, the resources required, and they became the top priority. And it was those staff that were given connections at home, given the ability to work from home, or given the dispensation to come in the office and run the bank. It was vital that the branches remained open and didn't create panic, didn't create uncertainty. So our branches, as I say, remained open, shorter working hours, but nevertheless, all our branches, apart from 1 or 2, which had local incidents of the virus, they all remained open, as they did across all our competitors as well. Most important was the ATM and POS network. We don't want customers handling cash because that could be infected. And we have less branch operating hours as well, so we want more and more of the population to use ATM and POS services. And those functions were fully operational 24/7 and have been for some time now. Payment services, again, were also important. And again, we've been operating with uninterrupted payment services, and customers can still make normal national and international payments in the usual way. On the second week of the crisis, salaries and pensions were processed, salaries for government employees and pensions. And again, it was very important that the Kosovo banking industry and its branch network in particular were able to process these, and we did. Thousands of these were processed on the Wednesday and Thursday of that second week of the crisis. And increasingly, and certainly in Raiffeisen Bank, 95% of our staff were able to work from home with IT connections being installed. And it was a fantastic job, 24/7, by our ops and IT staff to enable this to happen. The third C is cash. And again, the ATMs remained fully stocked. Even in the quarantine areas, we were given special permission to man and fill up the ATMs. And we had additional transportation and storage facilities put in place to manage the cash, the transportation of it, and the continuing replenishment of all our ATMs. Again, that was a practice agreed across the industry, and to date has been working very well. And the final, possibly the most important C of them all, was communication. Communication and coordination with the central bank. We were again consistent there about our message, making sure that the central bank and all the banks were aligned with whatever messages we wanted to get out there. And in the space of 2 or 3 days of that 13th, 14th, 15th of March, we issued many messages, at times to correct misunderstandings amongst the public or the media, and at times to show and reassure the public that the banking sector was stable and open and as normal as possible. We've also used social media much more with our messages to our customers, and also we have consistently communicated with the media to make sure that they get the positive and reassuring messages out to the public, because 1 or 2 media were looking for the problems which just simply did not exist. So I think we can look back with great pride on the implementation of these 4 C's. Of course, this continues to happen daily. All 4 of these are still needed and will be needed for some time to come. But the banking industry and all its partners performed very well on the early days of this crisis with the implementation of these 4 critical criteria: cooperation, continuity, cash, and communication. The second week of the crisis, what a week. On the 23rd, the government introduced a new curfew of 10 o'clock to 4 o'clock, where nobody was allowed on the streets. And of course, we therefore had to shut our branches and start operating at the unheard of early hour of 7:30, closing at 9:30. And I really want to thank our branch staff for their commitment and dedication there. To start operating a branch at 7:30, you need to be in the branch by 7 o'clock. And it's quite a challenge to shut the branch down by 9:30, do all the activity required to close the systems, close the business, and get home by 10 o'clock. And our branches across the industry all did a fantastic job squeezing business and the branch operations into those 2 hours. On the Tuesday, we started serious rollout of the deferred loan payments. So thousands of customers now have the benefit of being able to defer their loan payments for over 3 months. I should be clear, it is deferment of the capital, not the interest. The interest is still paid, but the capital part of your loan payment can be deferred for up to 3 months in both private individual and business segments. On the Wednesday, things were relaxed a little and special permission was given for some functions to operate during those curfew hours of 10 till 4, which helped us a little in terms of getting the branches ready, getting cash out to our ATMs and various other functions. On the 26th, something in many ways we can do without. The government had a no confidence vote, which was not, let's face it, a good time for such an event to happen. And on the 27th, the curfew hours changed from changed to 5 o'clock in the evening to 6 o'clock in the morning, which meant a change in our branch operating hours in a positive way. Then we were operating from 9 till 2, which is the case today. But every day of that week, something seemed to change and create work and a change in the way we were managing our operations. So, where are we now? I think it's fair to say in what we would call the third week of the crisis, liquidity in the banking system is normal. Deferred loan payments have been implemented quite significantly, and on the next slide you'll see some specific numbers. The customer reaction from perhaps panic in the first day or two has been overall positive and reassuring, and it really is business as usual in the banking sector. The increased use of electronic channels has been remarkable, and we have increased, for example, POS activity by 20% compared to this time last year. We've seen a 49% reduction in branch transactions and a 30% increase in transactions on our ATMs. On the internet, compared to March 2019, where 61% of our transactions were on the internet or on mobile phones, in March 2020, 78% of our transactions are on the internet or on mobile phones. And that is really with only 2 weeks of the crisis during March. April activity will be on electronic channels will be even greater. The government's overall reaction has been supportive and positive, and have given the industry very positive comments and feedback for how we have operated during the crisis. Apart from 1 or 2 minor exceptions, media reaction again has been very positive about the performance of the banking industry. And here we are in week 3 of the crisis, just now starting to look beyond pure running the bank activity and seeing what resources we can use, still working at home and being dedicated to development activities. We cannot continue on just run the bank activities forevermore. We have to start looking at the future of the bank, and as many people are saying, the new normal and how we might operate in the future with increasing working from home and increasing working apart. Looking specifically though at the deferment of loan payments and the opportunity for customers not to pay their capital, the capital part of their loan payment for 3 months. Within Raiffeisen Bank, 70% of our corporate clients have taken this opportunity, 53% of our small and medium businesses have taken up this offer. 54% of private individuals have also taken up the offer in what has become a two-step online process. And I also want to thank the 40 or more full-time staff we've had working on this process in the bank to enable this to happen. As an industry, as you'll see on the graph, I haven't got precise figures, but taking our market share and extrapolating that to the whole industry, around 70,000 private individual customers have taken advantage of deferred loan payments, and around 12 or 15,000 businesses have also taken up the offer. I hear that is much more than neighbouring countries such as Albania and Serbia, where the take-up has been a lot less. So I think it's been a very positive proposition and a very popular proposition that many of our customers have welcomed. Looking to the future, and it is very difficult to even predict a week from now, never mind a year from now. As J.F. Kennedy once said, in a crisis, be aware of the danger, but recognize the opportunities. And I think that's where we are now, is trying to recognize those opportunities, take advantage of the need for change. And as has been said many times, the phrase is necessity is the mother of change. And with the necessity of needing a new way of banking, it will be the mother of change of banking globally, not just here in Kosovo. I found this slide very interesting and perhaps true. Who led the digital transformation of your company? It's a question we might ask in a year's time and look back and say, it was the virus, COVID-19, that led the transformation, rather than the chief executive officer or the chief technology officer. I think it's a combination of all three. But the crisis certainly has pushed forward and will push forward technology change, behavior change, and operational change in the banking industry across the world, and of course here in Kosovo. So looking to the future, which, as I say, is very difficult, what it will be the new normal. I think we'll see now less cash. We will not go back to the cash levels we had previously. We'll see less branch transactions, pure money transmission transactions, and we'll see certainly more online banking. I think branch operations going forward will be much more focused on relationship management activities rather than money transmission or cash management activities. I think we will need to offer very proactive long-term customer support across all business segments. Many will need help to continue to survive, to get through the crisis. And we'll have to take a very empathetic and realistic and long-term view on our debt recovery plans, which will be implemented. Many companies will suffer for many more months or years to come, and the banking industry needs to recognize this and act accordingly. And I think there will be a fundamental review of our business continuity and crisis management plans in the months to come. We always learn from a crisis, and we will learn from this one and change, and operations will never be quite the same again. Looking from a broader perspective across the banking industry, I think regulators will require yet even more strength in 4 key areas. The crisis of 2008 strengthened these areas, and I think this crisis will strengthen these areas even more. The first being governance and the quality of the senior management in the banking industry. The second being risk management, not just credit risk, but other types of risk as well, such as operational risk and market risk. Our capital, we may need yet even more buffers, even stronger criteria to withstand stress tests. And liquidity, both the type of liquidity, the depth, and its longevity will strengthen even more to make us even more resilient as a banking industry. I think, unfortunately, some banks will not survive, and there will be an acceleration of mergers, acquisitions, and the fintechs who don't have such costs, such legacy systems, can change more quickly and will really start to gain even greater momentum and become an even more significant part of our industry, probably in partnership with banks rather than on their own. But I think fintechs will benefit from this crisis and move forward dramatically. And finally, I think we can say with great confidence that unlike 2008, banks will be the solution to the crisis, not the problem that we were 11, 12 years ago, will be the solution. We've never been better placed to face this crisis and fix the problems. Thank you. Now I really would welcome your questions, and please feel free to ask any questions, and I will respond over the internet in the next day or two. Thank you.